All right, all right, all right. Everybody, welcome to the very special 10th anniversary live stream for the channel. Thank you everybody for joining. We're going to let YouTube load, get you guys in here. Give it a moment. Wanted to let you guys know that we have some very special content on the channel this week. We have content for, we did a very special May Day broadcast and talked a lot about silver and talked about what the CFTC was doing a few days ago in a special video on the channel called Mayday, Mayday, silver being ripped off the Comex. And we showed you where the silver was coming off the Comex. And we'll continue to talk about those stories we had this week as the YouTube loads and we get into the presentation. We also talked with a couple of different companies this week. We talked with a uranium company that does a uranium stream a couple of days ago and profiled why uranium is in a bull market. If you guys are interested in uranium, that's the first time we're covering that on the channel. That came out a couple of days ago. We also covered a gold royalty play in this space, Sailfish, who we think could be a pretty good option for you guys. And last Sunday, we also covered the 10-year anniversary of the Silver May Massacre. It was a special preview edition on the Cowboy live stream, Cowboy Metals live stream, where we talked about that as well as some other stories. So if you're interested, go take a look at that on the channel. And I will get started with the content here in a moment as people load into the room. Please feel free in the meantime to visit our website at goldsilverpros.com, where you get a lot of free information and you can subscribe to the website as well. And please like and subscribe here as well if you do not mind. Okay, we are just about ready to get started. Gonna get my sound down. Hoping you guys are enjoying it. I see Cool Breeze is in the chat. Hopefully Yara will join us at some point in time. Prepper Days, thank you for joining. Papa Z, hey Prepper Days, how you doing? Good to see you in the chat. Very happy to have you here. Thank you very much for joining us. All right, I think I got my audio problems worked out and we are about ready to go, guys. We're gonna have some special guests joining us today as we get everything set up here for you guys. So don't miss it. Some special guests will be dropping by the program. Okay, I think we're about ready. So hi, this is Rob Keens at goldsilverpros.com. Welcome to our May Massacre special. It is the 10-year anniversary of the Silver Massacre that occurred back in 2011. There were actually two instances of a massacre in silver. The big one was in May, where the price fell down from 50 bucks. We'll show you what happened there and essentially what it means to the silver community. And I'll recount some personal stories as well. Thank you guys for streaming in. We got lots of people in. I'm just looking over here at my other computer on the chat. Dale Wakefield has joined. John has joined. Jeff Hall. Michael is here. Thank you so much, Michael, for joining. Been a big support of our channel since the very beginning. Thank you. Denny Fott, Grow Mechanic, Michael Volk, Willy Wonka, Nazi YouTube, Papa Z, Kurt Hull, Scott Hirochka, Maritimus Maximus, thank you for joining. Dude Boy is in. Hey, Dude Boy, good to see you here. Always good to see you in the chat. We're going to welcome some people in, then I'm going to get started with the program here in just a moment. Sub-Zero is here. Silver Bullet Report is here. Isaac Dominguez, thank you for joining. Douglas Ein, thank you for joining. Elliot Martin is in the house. Thanks everybody for joining. We got 137 users, so I'll go ahead and get started. I'm going to flip over. We're going to share some screen and we're going to talk about what is the May Silver Massacre. For those of you who are just don't know what it is, you're just getting into silver, you're not aware. We're going to share screen on a price chart of silver, and we're going to go right into what is the May Massacre as we get kicked off. Okay, so thank you to SD Bullion, Mr. James Anderson, who we had on the channel, and also Gold Charts R Us. I've got the silver daily chart in 2011. You can see here we had a top of about 50 bucks. In the April timeframe, and then the first day of May, it got slammed and slammed and slammed down for several days during the month of May. That is the May Day Massacre. And by what you can see in the chart, is that essentially this is not a normal market. This stair step up is a normal market, but when you see all this slam down selling, that's really not a normal market, guys. It's a massacre. And basically it was a lot of paper dumped on the markets to essentially damage the silver price, because whenever silver got that high, I remember people talking about it. Everybody was commenting on the fact that silver had touched again on its all-time high, $50. There was a lot of attention being paid to silver. I was working in an office at the time, and people there were essentially commenting on silver who basically had no idea what silver or gold were. I was a silver or gold bug in my office, and my friends were getting excited. Rob, tell me about silver. I know you know about silver and gold. So I started telling the stories about why I got into gold and silver. This is way before the genesis of GoldSilverPros. It's after I'd written my book, Drop Shadow, The Truth About the Economy. The people at my work had started to read that book. They started to see the truth about the economy. And then it got up to $50. People got really excited, and bam, May 1st, price slammed for a couple of days. And it was a massacre. As you can see, it touched down here in the $33, $34 mark. Then it started to rise again. And then we saw it in September get smashed again. And look at these bars straight down. That's an intervention. The market does not act this way, because when you have millions of participants in a market making price decisions, they don't all line up at the same time and go up or down. Even the ride up had been ridden up for a period of time, right? And it had it down point, up, down point. These are the slams, and that is the May Massacre. The May one, of course, is the one that kind of took the wind out of the sails of silver, at least for a while. People continued to build silver back up to about 44, 45 range, excuse me. And then when it got at that $44 range, it was slammed here and then slammed again, slammed here in August and then in September. So that is the massacre and the 10-year anniversary of the silver market. And this was, of course, after the last financial crisis. We had the financial crisis, 2008, 2009. People became aware of the problems in the system. They knew inherently that the system was not being fixed. You had the Troubled Asset Relief Program, TARP, by the government trying to fix mortgages and things. Didn't really do it. I was working for a mortgage servicer at the time. In 2011, I was working for a mortgage servicer. I saw the mortgage industry from the inside. That was my second mortgage job as an auditor. My first job as an auditor was with part of one of Morgan Stanley's very small units. I went in and actually fixed that up. I ran engagement to fix that up, to fix a bunch of loans. And we saw 50,000 loans originally that were owned by Novastar that was a subprime lender that was completely screwed up beyond all recognition. We fixed those 50,000 loans. I left Ernst & Young, where I was doing that consulting engagement, went to work for a mortgage servicer. It was called American Home Mortgage Servicing, the largest subprime lender in the United States at the time. And I was there in 2011 when we had all of those mortgage programs, TARP and all the other ones. They weren't working. I think we weren't healing from the situation that we had. The government only knew to print money and to throw money at the problem, but they weren't fixing the solution. Therefore, gold and silver being bid up, especially silver. And essentially, what happened was there was an intervention. This intervention had to occur, because if it didn't occur, silver was going to run all the way, 60, 70, 80, $100 or more. And so something had to be done. And so it got slammed down. And I'll leave it to your imagination who it is. But who is it typically? It's the bullion banks. But on behalf of who? Is it the U.S. government? Is it J.P. Morgan? Is it HSBC? Who are all these players in the market? Who is the ultimate responsible party? We don't know. But this was an intervention, and we saw it again. And it is just simply, markets don't act like this. It's very obvious that somebody came in and slammed it with paper. We could go back and look at the CME Group reporting back then on the exchanges. I'm sure we'd just see massive dumping of futures contracts, probably options as well. All right, so that is the massacre there. I'm going to switch gears, and we're going to talk about some things that happened this week. So I want to replay this Boca V keynote. I'm actually going to stop sharing, sorry, so I can get sound back. Let me share with sound. And we're going to go back over the whole Boca V thing, because I played this earlier. I think it was Wednesday or Thursday when I did the Mayday segment, where I talked about Rostin Benham. He's acting CFTC commissioner. He's over here on the right, talking about how they tamped down what was going on in the silver market in February during the SilverSqueeze movement, and how they used all of their tools to control the price and volatility in the silver market, meaning they were controlling the price and the trading on the silver market in his own in his own words here. We're going to play that for you. I just want to recap that for those of you guys who haven't seen it. So again, here we are, 10-year anniversary of the Silver Massacre, and we have the CFTC chairman, the regulator, saying how they controlled the price of silver 10 years later. They're still doing it. But in his own words, we'll go ahead and play it so you can hear him.
Yeah, thanks, Walt. It's a great question. It's something that I've been thinking about, and the events around the silver markets happened shortly after I took over. I think in late January, and I think it's important to distinguish what an equity space with what happened in our markets, in the future space, specifically with the silver contract. And in many respects, the resiliency and the market structure of the futures market really were able to tamp down what could have been a much worse situation in the silver markets. And just pointing to a couple things that I've observed over the past couple of weeks, and I shared with my colleagues within the U.S. government, and that are either unique to many respects to the equity space entirely. We have sort of history and precedent in the future space. We have a match order book, don't have rules. We have T+1 settlement.
So what he did there is he was just telling you all the tools they have to tamp down the market, and then listen to what he says next.
The clearing infrastructure as a general matter historically within the futures space is built in and very strong. Initial margin, daily mark to market, position limits, all of these things together, I think really were very effective in managing what was at some point in those few days in late January, potentially a challenging situation, and give credit to the exchange for utilizing its authority and some of the tools it has within the margin space to control the sort of the price and the volatility.
He just said to control price and volatility. So the regulator and the exchanges were controlling the price and the volatility. Volatility just means, the up and down, the natural market movements
of the silver contracts. But I think all those things together are important elements of markets that both sort of, transparency, resiliency, credibility, as we talked about in the sustainability space, that make our markets very, very resilient and strong. And we are keeping an eye on it. I've worked with the division directors across to make sure that we're, uniquely looking at the clearing space, the intermediary space, and the exchange space to make sure that the rules and regs we have on the books are going to be able to approach and manage this new technology and sort of new front in our market space. That all said, and you mentioned this, the larger policy question for me is about retail access and retail market participants. If you think about where we are today, vis-a-vis 12 months ago or 13 months ago when the pandemic really kicked in, we have individuals at home utilizing technology with cash and in trading in markets. We're seeing in the equity space, and we're certainly seeing a kick up in the futures market as well. To your point, I agree, having more access, having more participants is a good thing for many reasons, but we're leveraged markets. We have to be mindful of the guardrails, and the type of access and the type of intermediation that's happening. This is not a tradition.
All right, so notice he talks there about guardrails and all of this goofy stuff. And he said leverage market because they don't have. Essentially, in a leverage market, you don't have all the silver, you don't have all the whatever commodity. And so they had to control it because it was running away from them. And that's why they had to tamp it down. The price was going up and it increased the volatility. And they were going to run out of silver. They were running out of silver because SLV was draining London, and they were afraid of a run on Comex also, because if that price popped $30, you're going to see people staying for deliveries. And I'll talk about deliveries on the first day for the May contract because we have that data. Stay tuned for that. You're going to be amazed at how much silver just came off the Comex on the first day. All right. So I think we have a very special guest join the program. Hey, Andy, how are you? See if we got your sound.
Hey, Rob.
Everybody, it's Andy from Miles Franklin. Thank you for joining the program, Andy. We appreciate you stopping by.
Glad to be here, my friend.
I was just chatting about Rostin Benham, the CFTC commissioner speech to Boca V, where he admitted to them using all of their tools in the market to control the the volatility in the price of silver back in February when we were having the SilverSqueeze movement and the run on the SLV. Wanted to know if you wanted to make some comments on that.
Yeah, I find it funny that he says their tools were used to quell volatility. In essence, it created more volatility. The tools that are being used to create a perception of reality, Rob, for the masses couldn't be any more disconnected from reality. And, oops, sorry about that. Hang on, I don't even know how to shut that off.
That's right.
Anyways, the demand for physical metals is really the unlike anything I've ever seen. Just trying to secure metals now is a full-time job, where before it used to be a week or two in advance. You place an order at the worst, maybe 10 days. Normally you call and have it shipped to you within 48 hours. But now it's 2 to 3 months in advance, money 100% up front, large spreads, hedging, the whole 9 yards. And then when we're supposed to get the product, we're often told, no, it's not available. You'll get it in a week, in 10 days. We don't even know what's coming on the trucks until it's loaded up and on the way to us. So when you talk about the tools that they're using to quell volatility, well, in essence, what they're doing is trying to hold back the real price. And just simply based upon demand, Rob, it's really disconnected from the price.
So I wanted to share something with you, Andy, if you don't mind. We found somebody breaking off part of a Comex bar and selling it online.
Oh my God!
Are we at the point where there is no more small retail silver that we're going to start breaking up Comex bars?
If something like that were to happen, that's the news. So hang on, Rob. I'm so sorry. Hang on. I'm gonna mute.
You're doing fine, Andy. No worries. So anyway, for everybody watching, because of the retail shortages, because the Comex bars are selling for much less premium per ounce over spot, much cheaper. But because people can't afford a 1,000-ounce bar, they're selling these partials online. Sorry, Andy, go ahead.
Okay, I fixed it. Sorry about that. I had our voice over IP system ringing through my computer. I had to have someone help me with that. Yeah, it wouldn't shock me one bit. In fact, we built a smelter and we have now a press, and we're going to start making our own coins. In essence, that's what we're going to do. We're buying scrap anywhere we can, and 1,000-ounce bars, melting them down and turning them into pieces. Breaking it off is a little bit dramatic, but I think the point is valid. Getting coins is really hard. I talked about the U.S. Mint shutting down for 2 weeks, and there were some people online who kind of gave me heat about that. And I had said, hey, this is going to happen from everything I've been told. Now, I don't know, or for 2 months rather, I don't know if it's really happened or not, but I can tell you, Rob, as far as I'm concerned, they haven't made a coin in weeks. We've seen nothing, no allocations whatsoever. So you're at the behest of 6 major mints: US, Canada, Austria, Australia, South Africa, and the United Kingdom. Well, we've seen problems with the Perth Mint. I mean, the US and the Canadian mints are the model of inefficiency. And so they're, getting stuff is really difficult. And now you have an awakening, an investment awakening that is really making it difficult, because you have 30 years plus of recency bias where the mints and the distributors and everyone involved just hasn't had the need to make the kind of volume that is being demanded right now, and increasing because of guys like you, and because of the Reddit guys and Chris Marcus and Bix and all the people talking about this. It's growing rapidly and expansively. Demand is far outstripping supply in this industry, and quite frankly, I don't see any signs of it abating.
I don't either. Now, I heard a bit of news, Andy. There was an excuse made for the mints that they're changing designs on the coin, so they had to shut it down. How legitimate do you think that is?
Right. Well, I mean, that's what I was saying. And then, people called the mint and they said, no, we have no intention of shutting down. But in essence, they have. To change the die and to put, they've been very tight-lipped about what that security feature is. A lot of people think it's a chip. In my opinion, if they put a chip in the coins, they'll be the least sought-after coins on the planet.
Yeah.
The U.S. Mint, the Royal Canadian Mint, used micro engraving technology a little tiny micro engraved Canadian maple leaf they put on there, and that would, I think, would be a far better choice for them. Look, I don't know what the reason is. If I had to guess, they just don't have enough blanks to make the coins. I don't know that to be true, but why else would the only branch of the U.S. government that makes any money just do all they can to limit how many ounces of gold and silver they're putting in people's hands? And, you know, with platinum, it's the same thing. They only made maybe 30,000 platinum eagles, something like that. Tiny amount. So yeah, it's and they're probably in normal times the biggest hub for all metals transactions in the United States. So that's what most people buy. And right now, premiums on them are higher than I've ever seen in 31 years on gold, silver, and platinum. And here again, I have no idea when they're coming back online with the Type 2s.
Andy, I wanted to show a report from the LBMA real quick and then get your opinion. So this report's been going around. I know Chris Marcus had it on his channel recently about silver and the social media, the SilverSqueeze movement pulling metal off the LBMA. So I wanted to walk through an astounding emission. This is on the LBMA's website, and they were talking about SilverSqueeze and what happened with all the silver being pulled over to the SLV and being taken off of the market. So we're going to start here with an emission on page 5. So under the implications, another surge in demand. It says at end of February 2021, 765 million ounces is allocated in London against ETPs. ETP is any exchange traded product like the SLV. And it left about 360 million ounces of potentially metal available. That's after they're in 3 days, they pulled 110 million ounces. So people originally, late January, February, pulled 110 million ounces out of the OTC market in London. It went into SLV's coffers. So they only had 360 million ounces left. And it says here, this suggests that the demand in the iShares, had it continued at the frenetic rate of those 3 days in late January and early February, it had only been a matter of weeks before London's existing stock was used up. And while it would have been surprising to see ETP demand maintain this pace of buying, the concerns are still very real. It reflects both the time required for a refinery to convert the non-good delivery into 1,000-ounce bar. So there's a couple of things there. One, the buying in SLV almost bankrupted the LBMA. So they didn't have as much metal in the LBMA as everybody thinks they did. And the other admission there was, well, to get more, of course, it had to be refined and brought onto the LBMA, meaning if you have exposure to the London OTC market, it's for forward. Forward.
You know,
right?
I think you can put that in context. If they're saying there was only around 300 million ounces left before it bust things, I know you work more. I'm more conceptual, and you're more fact based. So I'm going to ask you this question: how many ounces were taken off of Comex in March? 50 some million, 55 million, something like that. Do you remember?
Something like that. Yeah.
And then I believe there'll be somewhere north of 60 million, if I had to guess, in May. So you're talking just coming off of Comex in the first 2 delivery months, half of that. So are we that close to the whole thing busting apart?
Well, it's interesting, Andy, because the first day's number for May are here. There's 5,123 deliveries, which by my calculator, the first delivery date in May, 25,615,000 ounces were taken off of Comex. And that was the majority of the open contracts.
So, but they still have plenty of time to take more off, and we see that a lot. They don't declare it right away. But I mean, anyway, the bottom line is you're seeing just a few months worth of Comex deliveries being all that's left on London in that example. And so I would say to you, we're closer to the whole thing breaking apart than ever before. And maybe that's a more accurate reflection of why on February 1st or 2nd, there was a 1.5 billion ounces dumped in paper silver at the open. They're trying to shake everyone loose from this belief. When you start resorting to, in broad daylight, those types of tactics, I would argue we're closer to this kind of stuff that I never really thought would ever happening. And you know, I think that you're talking about so many expanding uses in industry and digital and in the Belt Road Initiative, and but you're also talking about for the first time, a growing investment demand globally. When we talk about the SilverSqueeze, it's not isolated to North America. This is all over the world. People are sending emails to me, and this is very different, man. I've been doing this for 30 years. I never thought I'd see something like this ever. And so it's very, I think, to me, it becomes a situation where the physical demand, because of industrial side of things, is growing and it's depleted in nature. And now that you have an investment demand that is waking up the way that they are in cryptocurrencies, the way they are shedding dollar exposure and all fiat exposure, I think when we talk about $100, $200 silver, when we talk about Comex blowing up, when we talk about force majeure, when we talk about cash settlement, these things are becoming very real. Things that I never thought would happen all of a sudden are, in this case, only a few months worth of deliveries away based upon that statement.
Yeah, and this is somebody from Wall Street Silver posting what they did for the May Massacre. This is all the silver they ordered. So when you say it's all over the world and it's lots of people, I mean, this is evidence.
That's a lot of silver.
That's a tremendous amount of silver that one person just bought.
Well, and especially when you realize that silver eagles are north of $10 an ounce over the price of silver. Those are $17,000, $18,000 mint boxes. Look like at least 10 of them there. So good for them. I mean, look, yeah. And I think that whether or not this has any real ramifications today is debatable, or we'll find out. But to me, here again, what it is, it's just expanding the interest level and the awakening and the understanding. That's really the most important thing. In reflecting upon 30 years worth of doing this, that's what's so different. Yeah. 1 out of 100 people could have a 30-second intelligent conversation with you about metals my whole career. Now, all of a sudden, you have a whole group and a whole generation of people that is waking up to, or are waking up to what this is and what it really means. And again, I hope that they look at it as wealth, because that's really what it is. Yes, it will perform like a hell of an investment based upon so many, sound, logical reasoning or reasons, but it's wealth. And I hope people understand that and look at it that way. It's been viewed that way for thousands of years. And when long after the dollar bills in our wallet are hanging from a frame in the Smithsonian, silver will be wealth. And today, when you talk about SilverSqueeze 2, I hope there's SilverSqueeze 222. I hope I'm around to see it. And my only feeling is that there won't be much to get long before that happens. I have said for years, you go back to some of the interviews or speeches I did at conferences 2014, 15, 16, long before any of this ever happened. And I always said the same thing. Ultimately, the market will define itself by an inability to source product. Because I've seen this happen year over year over year when there was 1 out of 100 people buying it, when no one wanted it. The mints are inefficient. You turn on the demand spigot and it'll happen a lot faster than people think. And it's already, in my opinion, it's halfway or better there, just based upon how difficult it is. Look at all the online companies. They have nothing and their premiums are to the moon, and there's delivery delays. And we're expanding quickly the interest level. And as that continues, getting supply will mark this industry. It will be the defining characteristic, at least from people like you and I. People on the outside may look at it and say, my God, it's gotten really expensive. But I think anyone who tries to actually go out and buy it will have a hard time before this is all said and done.
Yeah, somebody who's in fintech did this really cool thing. I've been working with him to build out a site on gold and silver analysis, and he's scraping data from a lot of the retailers. So you can see here, Monex, APMEX, and so on and so forth. So for example, if you wanted to get a 1 ounce, we'll just do a 1 ounce here and reload this chart. Or one period. There we go. Then you can see the premiums, the amount available that they have, the sell price, the buyback price. If you want to go to the 100 ounces. So if anybody wants, you can go to this URL, exploringfinance.shinyapps.io/gold silver, and you can see what the pricing is and what the availability is on a daily basis of all of the different vendors that are out there. And he's even got a nice little chart here, which talks about what are the premiums over spot. And it looks like, of course, Silver Eagle has the highest premium. Silver Maple is right up there. But if you get into some of the silver bars, it looks like it's a little bit better deal. Is that your experience, Andy? If somebody's getting into silver, what's the availability for Miles Franklin, and what are the good deals that they could get from you?
I appreciate you saying that. Well, first of all, we're not online, although we're building a really beautiful website that will enable it, and it'll be done in the next few months. Our prices, I think, on silver will be as good or better than anyone in the country. And right now, our best availability would be in Philharmonics and Maple Leafs and Eagles in terms of immediate delivery. I have north of 100,000 kangaroos that I paid for a long time ago that will be coming in the next week or two. Next Monday, they'll start coming in. As far as bars are concerned, in my opinion, the premiums are too close to coins like Philharmonics. And normally you would save $1 or $2. Now you're saving 50 or 60 cents. And so the refiners haven't been able to keep up with the physical demand. And so their premiums are too close, in my opinion, to the 1 ounce premium coins. So if you're paying $5 an ounce for a bar, and you're paying $5.59 for a Philharmonic, you're better off buying a Philharmonic, in my opinion.
Okay. I wanted to get into some of the numismatics, if you don't mind, because I know we've chatted about that a little bit. Numismatics tend to hold their value very well over time, but especially when there's shortages in the bullion. So I've got one that I purchased a little while ago, graded by MGC. It's a 1904 MS62 St. Gaudens.
Yes.
Really beautiful coins, if I can get to focus on it. Do you guys sell these? And if so, what's your opinion on the numismatics?
I'm going to look and see what my prices are. I know I will be the best price in the country on those.
Yeah.
64 St. Gaudens yesterday would have cost you from me, would have been $2,039 for 64 St. And what do I think about? I think if I had my choice, I would own nothing but them. For a good amount of time over the last few years, I have been begging people to trade bullion for numismatics because the premiums on them were so ridiculously low.
Yes.
And to me, they're my favorite way to own gold. They're a true piece of Americana. People are truly blown away by them. And I think that if you can buy them at a reasonable premium, it offers potential that other items don't, bullion items don't. I'll give you an example. In 2008 or late 2007, right before it was more or less ordained that Obama was going to win the presidency, the fear or the perceived fear of confiscation went parabolic. And with $1,000 gold, I would have paid you $1,700 or $1,800 for those 64 Saints. I flew all around the country for over a year and became Diamond Elite on Delta. And I would go to people's homes and I would buy back their numismatics and trade them into bullion. And I would fly to a guy like you in Texas and I'd say, listen, Rob, I sold you 500 of those 64 Saints over the last decade. I'm going to bring you 800 gold eagles. And it's much like playing the gold silver ratio. I think you can do the same thing with numismatics if and when we see a repeat of that, where you're seeing 60 or 70% bid price premiums to spot when gold bullion is trading at 6 or 7. And so when that corrected in around 2010 or 11, when it started coming down, it followed the same pattern that most markets follow. And where they start at fair value, they go to overvaluation and then blow off and correct through fair value to undervaluation. And really, for the last several years until just recently, I would argue they were undervalued, where you were able to pick up a 64 Saint for just a tiny bit more than a gold eagle. And right now, it's still on a percentage basis. It's only 5 or 6, 7% above a gold eagle, whatever it is. It's not a lot. I could still make an argument for them. If I had my choice, it's all I would own. But in the end, it's about number of ounces that matter. And so I think you have to try to strike a balance between gold content and numismatic premium, because if the you know what hits the fan, no one's going to care what grade you have, type of deal. So I think you try to find that balance. I've always kind of talked about being a hot fudge sundae. You want a big bowl of vanilla ice cream, and that's your bullion and your low grade numismatics. Nothing wrong with some hot fudge and some cherries, but you want to stick with mostly things that will provide you great liquidity. I would also like to say in my opinion, the modern minted numismatics are lipstick on a pig. And what you have there are pre-33. That's a numismatic collectible. When you buy the brand new stuff that's certified MS69, MS70, first strike, and whatever, and you're paying a big premium, you will never get your money back out of that unless you're getting it at or near bullion prices. And the dealers could care less about it. And we've sent out MS69 certified gold eagles when we were short on regular gold eagles. So here again, I think if people are going to buy numismatics, and stick with true numismatics, and that would be pre-33 US and PCGS and NGC certified only.
Yeah. Just remind the audience, if you have a question for Andy or for me, throw that into a super chat. It pops up where I can see it, and we'll make sure that we get that answered for you. So Andy, what do you think is going to happen, or do you ever think there's going to be enough silver coming back? Do you think the miners are going to start providing it? Is there something going on where the miners are going to start holding it back, or are they going to go, work directly with the independent mints, or what's going on in the mining space?
I think they'd be crazy to not. We saw Endeavor Silver. We've seen Keith Neumeyer do it with First Majestic. I think they'd be crazy not. The thing of it is that mining is such a labor-intensive, high-cost endeavor that you better be well capitalized to try to do that, and that's what happens. And you watch that show on cable sometime. I forgot what it's called. The guys are mining for gold in the Yukon or whatever, and they often talk about it. Well, if they don't get it this year, they're done. You have to be well capitalized because you spend a lot of manpower and machine power and energy to pull it out of the ground, and then only to not cash it in. It's tough, but you would think they should. Certainly, it's always been on my mind. Why do they not stand up more and are more vocal about manipulation? Keith Neumeyer is a businessman. He's not a geologist. Maybe that's why he did, and that's why he publicly talks about it. One of the reasons I respect him so much is that he's not afraid to speak it. Right. I would hope that they would. But look, we've been running deficits every year, a couple 100 million ounces every year short between supply and demand. And, when you're talking about this new Belt Road Initiative that's connecting 70% of human population, the need for silver is so expansive, it's unreal, on top of Biden's new Green Deal and an expanding investment demand. We're already running deficits. Rob, I don't know where the silver will come from. It's found in nature in a form called epithermal. It's very close to the surface. And because of that, all the low-lying fruit has been picked long ago. And so you have to dig and go further. And only 30% of all the mine supply comes from primary miners. So of 800 million, you only got 240 million ounces that were coming from companies like Endeavor and First Majestic. It's a game where it's disappearing in nature while expanding in its uses. That's a recipe for higher prices.
Yeah. So here I'm going to show Crescat Capital's gold supply clip. So this is the top 20 providers and their projected proven and probable reserves, and we start to see a sharp decline in 2024, and then in 2028 to 2030 it falls off a cliff. So if you're wanting to get gold, we don't have the supplies right now, and that's an issue. It's going to be up to the miners to find those supplies and to provide us, more of the gold that we're going to need on an everyday basis. So where do you think, Andy, this gold is going to come from?
That's a good question. Really, I have no idea, to be honest with you. It's maybe this is why, Rob. Maybe this is why you're seeing the biggest money in the world rush to buy it. And so maybe this is why you're seeing the central banks accumulate it. I don't know where it's going to come from, because here again, I think fiat currency is coming under fire and people are accumulating it. We're coming from a position where so few people owned it. Rick Rule often talks about prior to 2020, 0.5% of if you go from the average person on the street to the Harvard Endowment Fund and took it all as a grouping, there was 0.5% exposure to precious metals in 2020. The average of the last 40 years has been 8%. going all the way back to 1980, or excuse me, 2.5%, going all the way back to 1980 when it was at 8%. A 2.5% interest in precious metals, where you're only talking $2,500 per 100,000 invested per portfolio, is a five-fold increase in demand. And you're seeing this expansive demand everywhere. And I don't know where it comes from. And here again, this is really the point. When it's simple supply and demand, you're seeing it becoming harder to find, greater uses for it, more demand for it. And, if that isn't the recipe for higher prices, I don't know what is. And
all right, Andy, we have another special guest on the program. John Adams from Adams Economics has dialed in on his phone from Australia. John, can you hear us? And thank you for joining.
Good morning, Rob. How are you going?
Doing very well. Thank you so much for joining. I know it's very, very early your time, so appreciate you getting up early for us.
No problem. It's 5:30 in the morning here in Sydney, and we're all going good.
Good. Guys in the chat, if you want to ask a question of either Andy or John, please hit that super chat. I'm monitoring those, and we will get those questions asked. John, Andy and I were just talking about the gold supply cliff and how the gold proven and probable ounces are going to come down here in a few years, and there's just not going to be as much readily available supply coming from the mines. Have you been following that at all? And if so, what are your thoughts on that?
Well, the interesting thing is that the narrative coming out of Kitco News and ABC Bullion and a whole bunch of other organizations on the other side of the argument saying that there's a massive surplus of silver that's sloshing around. I always find it interesting that when things get desperate for the bullion banks, you get a whole bunch of voices out there basically running a counter narrative campaign. Thing is that there obviously is shortages in the market, particularly at the retail level. Those shortages have exacerbated over the last 2 or 3 months. So we're seeing it more clearly now compared to the beginning of February. I listen to Andy all the time, and he obviously gives a very good feel for both the American retail and wholesale market. And I have heard of retail shortages in Europe, but also I think in the last couple of weeks, I think someone sent me a message saying that at the wholesale level in Europe, things are still okay. So perhaps there are some problems in some geographical markets, but obviously as investment demand goes through the roof, they just will not be able to catch up. And obviously the LB May report that I heard Chris Marcus talk about the other day, they were obviously signaling that I think they had only about 360 million ounces left to go after the big surge of ETF demand in early February. And if that had continued, London would have run out. So again, all of these data points indicate there's a problem with the price, and that as investment demand continues to ramp up in the next few months, if the price doesn't move, well, there's going to be huge problems with a whole host of counterparties that have to come up with silver. So at some point, the bullion banks will have to let the price move up, just like they did last July. And the question is, well, when will that point be? So we'll have to wait and see when that is.
John, we had a super chat come in for you. Fat Vegan asked the question, will the Australia housing market crash? Or will the Australia housing market crash cause the U.S. housing market to crash, pumping up other asset values? So do you think those markets are related?
No, I think it's like the Australian housing market, I wouldn't say isn't related to the US housing market. There has been a lot of chatter in the Australian economy about a housing market crash. So our household debt bubble is the second biggest in the world relative to GDP, behind Switzerland. In the course of Australian economic history, it's the biggest debt bubble we've ever seen. Harry Dent, one of the famous deflationists around the world, has come to Australia on multiple occasions and warned about a deflationary crash. And early on in my commentary back in 2016, 17, 18, I was talking about the risk of a big deflationary crash. Now, so that is absolutely possible. The problem is that anytime there's any chance of a deflationary crash in housing, Both the federal government, some of the state and territory governments, and our central bank, the Reserve Bank of Australia, continue to pump stimulus to keep the market afloat. So 2020 was a very seminal year in the in the course of Australian economic history. We had the biggest fiscal and monetary stimulus package ever, and that was not about saving the ordinary Australian because of the COVID-19 lockdown that we had. It was all about saving the banks. So, well, yeah. I mean, one of the points I'll make is when you look at the distribution of household debt, Australia is very different to America. So prior to the GFC, a lot of poor Americans had a lot of debt, and they basically were given loans that they could never afford. The argument here in Australia is that the higher the income, the more debt that they carry, and that's a different debt distribution to the US. But our debt distribution is very similar to what happened in Ireland before 2008. So obviously what happened with Ireland was, well, leading to the GFC, interest rates basically doubled in the European Union, and then when Lehman Brothers went under, you had systemic risk running through the entire European continent, and that's when Irish housing, that's when it went through the floor. So there's definitely a risk of that, but every time that we see signs of wobbling among people being able to repay their mortgages, we have the federal government basically stepping in and trying to keep the show going. So there is a risk of a housing market crash, but so far that hasn't materialized given the fiscal monetary stimulus, which I started calling last year. We're actually seeing stagflation here in Australia. But even if it did crash, I don't think that's going to manifest itself into a situation in America.
Thank you, John. Fat asked another question. Are the banking markets tied together worldwide? I'll take that one. Yes, they are. They do invest in each other across the world. There's something called invested capital, international capital markets. All the banks are tied together. So if you had a big Deutsche Bank, for example, blow up and melt down, it would affect the rest of the banking market, especially when we're talking liquidity and those liquidity ratios. Part of what the banking system is trying to do is implement Basel III, which is trying to increase the amount of reserves that they have to back up the banking system. They're having trouble meeting that. And so they've been pushing elements of Basel III back and back and back over time in order to get in line with it. And I think that's because there's so much debt in the system that you basically would have to print currencies to make the banks even somewhat solvent. And to that point, I know John was just talking about this, Andy. And while John was talking about all the money printing going on in Australia, I showed a chart of M1 here in the US and that hockey stick vertical chart. In fact, I'll show it again because it's such an amazing chart. What's your opinion of the money stock that increase that occurred across the world, in Australia, in the US, in the European Union in 2020? And how does that affect the economy and potentially the precious metals?
Well, in theory, it should have a tremendous effect. There's just been a lack of volatility. I can tell you, as someone who just purchased a new home, getting a mortgage, and I didn't need the mortgage. I took advantage of it because interest rates were 3%. That's free money. But getting the actual mortgage, and I have good credit, was the most difficult, gross thing I've ever dealt with. The banks don't want to lend the money. It took 12 weeks to get a mortgage through TD Bank and a big bank, and it came down to the night before closing. I mean, it was ridiculous. And if that's as difficult as they're going to make it, what's missing here is the volatility, and this is what upsets the Federal Reserve. The banks would rather keep their money at the Fed, earning 150 basis points with safety, than lend it out and double their profit or better, and risk the lending into this economy, into an economy that has been destroyed and eviscerated the middle class and the small and medium-sized businesses. I don't know, 130,000 that are gone forever, if not more. And so the banks are gun shy right now, and that's what the Fed doesn't want to see. So, the lack of velocity has created, I think, the talk of the Fed coin, where they could spend the money into existence instead of the banks having to lend it into existence. And so when you talk about all the money that has been created, yeah, there is inflation in lumber and in beef and in energy, and there are some things that are inflated, but that broad inflation has not manifested itself. Ultimately, it has to. They've printed so much money. 1 trillion seconds ago was 31,688 years ago. That money will find its way out into the system, and maybe it's when you see a currency rise from the east to challenge the dollar for singular world reserve status. I really do believe that is what the Chinese digital yuan will do. When you have that funding and clearing all of the contracts on this new Belt Road and Rail initiative, you're indoctrinating 3/4 of the world's population into a competing currency. There will be something that will challenge the dollar and send all of these dollars spiraling back quickly to home. And we're not there yet, but certainly the foundation for massive inflation has been laid. As soon as we see that velocity pick up, yeah, I think we're going to see massive inflation, and it should certainly manifest itself in higher metals prices. And quite frankly, I'm surprised that they're not much higher based upon all the money that's been created yet. And that's one of the things that the naysayers will point about precious metals. But here again, you got to talk about the manipulation and the naked shorting, and that has to be factored into the equation too. And if you put it all together, to me, the big money is factored against all the deliveries off of Comex at the same time, and the Basel III reclassification of gold, and the central banks repatriating it. They've been front running whatever's coming next, and they've held down the price of metal, and they're not letting it reflect the inflationary numbers. They're not letting it reflect reality. Price discovery in precious metals is a joke right now, but when you see the amount of deliveries and the efforts and the movements of the biggest money in the world, to me, the stage has been set, and it's already, it's going to happen. How it happens, when it happens, what's the catalyst or the perceived catalyst is another question altogether, Rob. But, look, let's just say this: gold and silver are traditionally viewed as an inflation hedge. But even if you had the opposite, a Great Depression, massive deflation, gold and silver are the only assets that are not simultaneously someone else's liability. So that's why, to me, they're wealth. They've weathered German hyperinflation and the Great Depression, and 2 world wars to boot. And so I think when you talk about why we own gold and silver, it's not to get rich. It's to protect for that type of event, whether it's massive inflation or anything else.
Yeah, and I've got up here on the screen, I'm at Trading Economics. We're looking at some of these commodities. You see all these commodities up: lithium up 93%, rhodium up 72%, tin 40%, cobalt 46%, lean hogs 54, beef up 12, corn up 44, lumber 66.7, canola 41. You name it, we've got inflation across commodities complex. But here in the same space, we have gold year to date down 6.85%, silver down 1.66. Platinum is up, but that's an industrial metal. So is rhodium. But the 2 money metals are down. So like you said, Andy, I mean, it's basically not, realistic that you have all this inflation. The economy, the precious metals aren't going up at the same time. It's really kind of silly. Want to introduce another special guest of the program. Craig Hampton from TF Metals is here. Craig, how are you doing?
Robert, hey, man. I know we've never had a chance to really talk before. I was stopping by my office to check some emails. I saw that you were doing this. I just thought, what a great chance to stop by. Thank you for all you do, and for fighting the good fight.
Well, I've been following you for a long time, so I'll throw that appreciation back at you. I know when I was early in my investment career in precious metals, I followed you a lot. I followed David Morgan, Eric Sprott, a lot of those guys, and I appreciate all that you've done over the years for the community. So I'm happy if I can contribute anything back.
Well, you're doing a great job.
So, Craig, we have Andy Scheckman here from Miles Franklin. We also have John
Craig.
Adams from across the pond on the phone as well. And one of the questions we got in chat was how tight is the bullion market worldwide? So maybe that's the time we get into the discussion of real physical versus unallocated and pooled accounts, and where do we stand with that? I'll start with you, Craig, and then maybe John will come to you after that.
Good question. I wish I knew. You know, that's the biggest problem that we have is the opaque nature of the precious metals markets that are that way by design. I mean, they do not want you to know how much metal is out there, how many times metal has been levered, how many beneficial owners there are to each ounce. And so I don't know if I can answer that question, but I do know that there's a lot more digital and synthetic ounces than there are actual ounces. And so I like my math eventually. I'm not sure if in the end we'll have a lot of impact this weekend, but if anything, we had an impact in helping some folks to see the light, diversify themselves out of dollars into something substantial. And, you know, if we could convert a couple of people that way, it makes it all worthwhile.
Sure. John, do you have a thought on that in terms of real metal versus some of these pooled or unallocated accounts? What are your thoughts there?
Sure. I'll probably make a few points. The first one is when Andy was talking about deflation and the ability to own an asset that doesn't have counterparty risk. Obviously, the important aspect of what Andy was saying is you have to own physical gold and silver. That's your direct legal property. So unallocated, pool allocated ETFs. That may now help you in a deflationary depression. So that's probably point number one. So point number two is, here we've had a global conversation about this topic over the last 6 to 8 weeks, and I've been saying a lot about the Perth Mint in vis-a-vis silver, and then lo and behold, Edmund Moy, the former director of the US Mint, goes on Kitco News and says the Perth Mint is out of gold. And I'm thinking, wow, I haven't even gone that far. And I'm thinking, what's his data on Perth Mint's gold supply? So I'm waiting for Richard Hayes to come out on the public record and say Edmund Moy doesn't know what he's talking about because we have plenty of gold. So, and to be honest, like a hand on heart, I have not heard of any Perth Mint customers here in the Australian market saying that there isn't a problem with standing for delivery about gold. So when I was doing various interviews on YouTube and tweeting about the Perth Mint, I had concrete examples of individual investors who had unallocated, pool allocated, who stood for delivery for silver and couldn't get it. So I don't know where Edmund Moy is coming with his accusations that the Perth Mint is out of gold, but obviously he also said in that interview, which was only posted I think 1 or 2 days ago, that there is not enough silver to cover all the paper. So even though people like myself and Craig and Andy are called conspiracy theorists and we don't know what we're talking about, well, Edmund Moy, the former director of the US Mint, has basically said the same thing. There's not enough silver to cover all the paper, whether that paper is Comex futures contracts or whether it's the synthetic products unallocated, pool allocated. So I think that for someone who used to be on the inside, coming out on Kitco News saying that, that to me was a big tell. And Rob, I don't know if you want to what extent you want to get into this, but if your audience doesn't know, I did post on Twitter yesterday. I've been served a cease and desist order from a law firm here in Australia on behalf of Kitco's Metals Incorporated. To be honest, I find the whole situation quite hilarious because a lot of people, including Craig Hemke, he's been mentioning Kitco News, and all of you Americans and Canadians can't rise to the level of getting Kitco's attention, but somehow little old John Adams in Australia gets the attention and obviously gets a legal notice. And to be honest, I think the reason why I got this legal notice was because I was tweeting Kitco's phone number and saying, call this number, stand for delivery. And I think they're nervous about their customers standing for delivery around silver with these unallocated, full allocated accounts. And so that's why I think we're seeing legal intimidation tactics. We have a few interesting maneuvers going back and forth with lawyers, and we'll see where that goes. But I think there's a lot of bullion dealerships, a lot of suppliers of these synthetic products in the market who are nervous, and they want to keep the conversation suppressed, because the reality, Rob, is the more people who actually are aware of this issue, and the more people who convert from a synthetic product to a physical product, they're never going back, because once they understand the risks involved, well, and they actually pay the money to go to physical, there is no incentive for them to go back. And while I've got Andy here on the call, Andy did an interview a few days ago with Dunnigan Kaiser on Liberty in Finance, and Andy mentioned that he's getting some substantial clients in the American market now nervous about unallocated products and are calling Miles Franklin and standing for physical. So while Andy's here, I'd love to get Andy's views on what exactly are what is he sort of seeing in the American market, and what are these customers with synthetic positions? What are they actually saying to him when they are looking for physical?
Hey, Andy, before you answer that, just real quick, wanted to welcome Bill Murphy to the program, the co-founder of GATA and of La Metropole Cafe. I think we all owe Bill a huge gratitude and debt for his research and what he has done the past 20 years, his tirelessness dealing with the bullshit manipulation. Thank you, Bill, for all of that. We appreciate you. Did you want to have a comment before Andy answers John's question?
Oh, just thanks for you, Rob. And of course, Andy, you've been great. And I salute all you guys. And it's a pleasure for me to be here.
Thank you,
And
Bill.
I just was meaning to pop in for a minute because it's Derby Day. So
okay.
I still have a cocktail upstairs.
Okay.
So I just wanted to say hi. So I'm going to drop back out, but hey, John, keep the faith. You're doing great down there.
Thanks, mate.
Jana Scheckman.
Oh, it says Jana. Oh, man.
Looking good.
That's my wife. Good to see you, Craig.
Jana, she's got quite a bit. She's like the
Got
bearded
to
lady.
shave. Yeah, I know.
Bill Murphy, he's a carnival. He could be a carnival act too. He's a heck of a, he's a barker. Doing great. Nice to see you, Bill.
Well, nice to see you.
And look at Chris Marcus showed up. All right, I got to go. Robert, thanks for doing all you're doing, man.
Thank you, Craig. Appreciate you.
See you guys.
Bye, Craig.
Hey, Chris, how are you doing? Thanks for joining.
Doing quite well. How are you today, gentlemen?
Doing very well. So just to recap, we have John Adams on the phone from Australia, Andy Scheckman from Miles Franklin, Bill Murphy's joined us from GATA and La Metropole Cafe, and of course, the one and only and can never be duplicated, Chris Marcus of Arcadia Economics.
Thank you. It's a pleasure to be here.
Yeah, I think John asked a question for Andy, so I'll let him answer it, Chris, and then we'll introduce you, and you can jump right into a topic of your choice if you wish.
John, we've been getting a lot of people calling very concerned about their unallocated programs. To me, the biggest determinant would be, do you get free storage? And if you get free storage, you get what you pay for. I think that really kind of is to me the determining factor. A pooled account and free storage is zero liquidity, especially when you need it in this type of environment, if you try to collect on it. And that's really the big thing. The stuff that has been happening at Perth that I hear from my clients is that they try to go from unallocated to allocated, which first requires fabrication, and they're told months upon months. So that's not what you want in that environment. But look, I think bottom line is if you don't hold it, you don't own it. And if you are going to have it stored somewhere, it needs to be in a facility that it's segregated, it's allocated, it's audited, and you need to be able to go there and pick it up. And if those things are in place and it's a legit facility like Brinks or Loomis or any of the above big time depositories, you're fine, I guess. But look, a pooled account is something that people are really getting very scared about right now. So we've had numerous people call in from domestic and offshore pooled accounts that have been converting, maybe a couple dozen a week. So I think that the efforts that you are doing, John, are having an effect on people. They're waking up to the fact that being penny wise and pound foolish with your gold ownership is not a good idea.
So I guess we'll turn it over to you, Bill. What are you seeing in terms of, let's just talk about what you had on GATA recently. What do you see in terms of manipulation? Have we made any progress?
All I know is it never ends.
Right.
This is the worst I've ever seen it in 22 years relative to all the other fundamentals. We've had some terrible times, but nothing like when the fundamentals are bonkers bullish for gold and silver. And all I know is, as Chris Marcus would say, silver at 26, silver at 26. It's even the last few weeks, you look at the chart, it's like this, ding, 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 ding. I've never seen anything so bad and so obvious. And what I would like to know from all these fellow pros that are on with you, how are they getting? I've been hearing about shortages now for 6-7 months. That is a long time. When you have a shortage like you have in lumber. So my question is, what are my fellow pros here, like, how are the bad guys, as I call them, getting away with this in silver for so long? I mean, I've been looking for silver to go to 100 for years, and it's been so wrong, because no matter what happens, no matter how much the fundamentals get more bullish, the gold cartels, I call it, the bad guys, they're JP Morgan, who's on top of this more than ever, just stuffs it all the time. And I don't understand how they can keep getting away with it. So I'd love to hear some answers if anybody has them.
Well, I mean, I track the Comex and there's tons of paper dumped. I think that has a lot to do with it.
Yeah, but eventually then you get out. Having been a commodity trader and big time at once, way back when,
Yeah.
You get arbitrage. Okay, if it's that bad, you buy the paper, you buy the futures and you sell the paper. Or you buy physical someplace and sell the futures. You buy the physical and sell the futures. Probably buy the futures. That's the problem, is you're not getting any of the takeoff that works. And I've been looking, I just don't understand it, because it never seems to end.
Chris, what's your opinion on that?
Did you ask me?
Yes, sir.
Look at my headphones in. Well, I love Bill. I think the guy's a legend. I mean, I don't know anybody else who talked for 5 or 10 years in advance about watch out when it goes through 21, and then it actually did. Although as brilliant as and legendary and heroic, shall we say, as this man may be, I got to disagree. I do think it will end. I think it's coming to an end. I find it interesting. It's an observation I've had that when you accuse people of running a Ponzi scheme, they don't talk about it unless they do talk about it. And then they give a lot of evidence, such as the CFTC commissioner talking about capping the price and volatility, something being tamped down for some worst outcome. I have a big announcement coming tonight, which I think will get to the bottom of all of this. But I don't know if Commissioner Benham could explain how his comments fit with the LBMA's silver report, where they talked about how scared they were of running out of metal. So perhaps the worst outcome he feared was a worse outcome for the LBMA's member bullion banks, who we've compiled evidence day after day, year after year, decade after decade of felonies. In fact, maybe the best way to put it in perspective, I was listening to this interview with Helen Chapman, who wrote the book J.P. Madoff, about how the felonies involved in being Bernie Madoff's sole banker. There's one point in the interview, something came up and she said that is like, as wild and clear as it was that Bernie Madoff was running a fraud, she said Bernie Madoff had nothing on J.P. Morgan. She said Bernie Madoff was not even in J.P. Morgan's league. And anyway, it seems like J.P. Morgan pops up in a lot of these things. Apparently, they're the only one who's, we're just trusting them to be custodian for all of the funds. Even the numbers don't add up. Rob or Bill or Andy, maybe you guys have a good lawyer who can get final confirmation on if I call iShares and tell them it's a recorded line, do I have your permission to record it? Can we publicize that? Because in case people, now, first of all, I don't know why you'd rather listen to mine rather calling for yourself and having the direct fund, because you can go to iShares, get the phone number there. I had fun calling JP Morgan and Goldman Sachs, CME, good fellas over there as well. So you can call and ask these questions and watch all of a sudden. See, I don't get it. I thought like there's legend Jeff Curry knows everything. This guy knows that copper, had an extra productive quarter last year and overtook silver as the greatest conductor of electricity, changing the periodic tables and the known laws of science to man. But that's the kind of experts that Goldman Sachs has. Yet when you ask them how the price of silver falls 10%, when the trust that they're an authorized participant for added a historic 61 million shares. Now, keep in mind, at least as far back as I could find data for until SLV was invented, until a week prior to that, the record was about 22 million ounces in a single day. Then January 29th, there was 34 million. And then there was another 20 million on February 1st. And they put up that 61 burger on the 2nd. So except for the Friday before, would have basically tripled the previous record. Yet Jeff Curry, authorized participant of Goldman Sachs, says that, the inflows weren't that big. I mean, only tripled the record in the history of the damn trust. Although again, I didn't work for Goldman Sachs. I did interview coming out of the minor league MBA Wharton training program. Yet, I don't know. I mean, they might have just the smartest guys around and nobody else can figure it out. But I did leave Jeff a message. I haven't heard back from him yet, but one time I called, they actually sent me right to his inbox, which was bucket list material, just being on the same phone system. But if you talked about how it was impossible to force a short squeeze because of position limits, which Goldman routinely violates. And I might add, in the March silver delivery report, they issued 2909 contracts. So depending on when they initiated those positions, Goldman may well have been short, while Jeff was saying that you can't have a short squeeze in silver because of position limits, which his bank routinely violates. He said that on February 2nd. He said that on February 4th. And I don't know, I don't know. This is what I'm trying to get clarity on, but maybe the only reason that he didn't have time for an interview on February 3rd is that that's when all of these silver trusts were changing the legal language in their prospectuses, including language specifically to prevent them from any liability and also give them the wiggle room to prevent them from any financial liability, legal or financial, because the way the legal terms were worded allows them to screw their customers by using the structure of the futures markets to tamp down the price, even though, despite Jeff Curry saying that the ETFs are the shorts, they buy metal, which is supposed to be held for customer, which means it would have no legal or economic incentive to hedge. He says then they go and sell futures on the Comex. And when I read the part of the SLV perspective that explicitly states that they had no activity on the Comex, maybe when they were changing all those things is why Jeff couldn't comment on the 3rd, but we'll revisit that before the night is done. I can assure you of that.
So stay tuned to Chris Marcus's YouTube channel. I assume, Chris, you're going to have a broadcast tonight.
Oh yeah, we might even I'm thinking it might be a great day for a marathon, because with so many keyboard thumpers sitting around and looking for something to do. And I think, as all of you know, it's one of those things people hear and read about it, but it takes a lifetime to even get like a fraction of the history that regulators, bankers, financial media really go out of their way to, despite talking about transparency, make sure that nobody knows. I mean, because, for example, how many people know that in the same interview that acting as the commissioner, Rustin Benham, while he talked about transparency and also talked about tamping down and controlling the price, I didn't know that they had tamped down or controlled the price. And his comments were posted March 18th. So there was something that he was that scared about that he was grateful that the market structure tamped the price. And then, unfortunately, his internet connection was poor. You can't hear if he actually says the agency took actions to control the price and volatility. But something was that disturbing was going on. He talks about the transparency of the agency, yet he didn't say anything about any of this. At least I didn't. I've been looking. I don't see anything, any press release on their site, but he goes to the Boca Raton Industry Futures Conference. And Rob, why is it that when I call and say, have you looked at the evidence I sent, that as far as I know, except for the guys that you and Bill and Andy, wow, well, there in the cabana now. Can we get you in the hot tub?
That's
there,
Andy's
sir?
new digs down there in warm weather land.
Andy, what's our hot tub situation looking like? Let's get the real stuff here. He's speechless. Andy, you get the hot tub warmed up. I'll continue.
Hot tub is big enough for you, buddy. There's plenty of room for you, my friend.
Okay, well, next time you turn your camera off, I'll expect when it comes back on, you'll be in there. And Andy, do you know, maybe you can, since you're in the industry, I don't know if you were on the list of approved people who got the tamp down notice, but if we're talking about the transparent CFTC, if the price was tamped down, controlled, whatever you want to call it, and not what I want to call it, what Ralston Benham said about it, has this happened at other times?
You glitched there. Has this what other times?
I don't know. He said the price was tamped down and controlled in early February. Are we on the 10 years ago today on May 1st when it opened? Hey, we had QE2 rolling, U.S. debt ceiling we even still had it then.
I remember that night vividly.
Was the price tamped down that night? Did the CFTC take action that night? And if the CFTC takes action to tamp the price down, yet their mission statement is to maintain an orderly and freely traded market, that's like saying the orange-pink basketball. You know, it's like you can't. It's kind of mutually exclusive. It doesn't. How do we know? Okay, so if people buy a lot of silver this weekend, is it possible that they're sitting by the trigger waiting to tamp it down again or introduce new market features that will tamp down the price? Here's another question. Actually, Rob, may I have the screen share for a moment, please?
So while you're screen sharing, there is a question for you, Chris, in the chat. If you just answer real quickly, are you going back to Washington anytime soon?
Not in this lifetime, if all goes well. I don't know. I went to Washington once. Tried to find any government agents. I can't even find someone that wants to see the evidence.
Mm.
It's not like I'm going out there and they're saying, all right, Chris, no, you're this is what you're missing. I mean, I call CME, call JP Morgan, or someone find a lawyer, tell me what are the rules. And if I can legally post it, I will, or call for yourself. I'm not making it up. Call them and ask them, like, here's Goldman Sachs, economic savants. They know about science too, but call them and ask them, how'd the price fall 10%? Why didn't Jeff Curry say anything? What does it mean when the price is tamped down? How do we know? Are they going to tamp? People buy more metal this weekend. Are they going to tamp it down again? And actually, I'll show you some real magic. I can't stay too long because Ma's visiting today. She's been putting up with me while I write this. I think it's going to be special here. But let's take a quick look at this, because this is also in the category of things that are special and that I'm guessing that most people don't know, despite the transparency that the CFTC talks about. But check this baby out. So we had the SilverSqueeze, kind of known as 3 days, or at least those 3 days of record-setting inflows that to Jeff Curry of Goldman Sachs just weren't that big. But we know, Rob, would you say it's fair to call SilverSqueeze January 29th, February 1st and 2nd?
Yes.
Okay.
The height of the SilverSqueeze, yes.
So check this out. Here, this is like, I think if I get a Wikipedia page one day, it's on my bucket list. Hopefully this will go down like territory of the magic bullet theory. Red line, January 28th, you see silver clearly gets over 2650, correct?
Yeah.
So therefore, before SilverSqueeze, according to the definition we're going to use for this example, before it began, day before, because this is the 28th. I mean, I'm not like lying. You see it right on the chart. It's Kitco's chart. It's the 28th. It's above 2650, right?
Yes.
So before this record historic buying spree that the LBMA, now in their figures, they say over the 29th, 1st, and 2nd, you had 119 million ounces added, but that's just the ETFs. Andy, I asked you if February 2nd was literally the most silver or call volume you've had in a single day in the history of your company. What you tell me? I wasn't there.
Yes, on both. Not even close. Not even close.
So February
Yes, on
2nd was not even close. It was by far the most silver your company has ever sold in 30 years. Is that what you're saying?
100%.
Okay, so LBMA said they had 360 million ounces left. And now we know 120 went into the ETFs. I don't know what the number is for the bullion dealers, but it sounds like a lot. And then after all this massive buying that has the LBMA afraid they're going to run out of metal, has regulators who are supposed to be keeping a free market talking about capping the price. And then look at what happens by the end of February 2nd, this historic buying spree in the completely, only a Fruit Loop alien hunting conspiracy theorist would say it's manipulated. Then here, February 2nd, look, we see the price at, and by the end of February 2nd is actually below $26. So it's you have historic record-setting buying and the price goes down. Then what the fuck is the point of having a Comex or a CFTC? I mean, what? I don't give a shit what stupid legal reason some puppet says. If you have the greatest buying spree in the history of the damn commodity and the price goes down, see, I don't care if Rostin Benham admits that. I don't care what Jeff Curry says. I love watching Jeff Christian's videos. I will admit that, because that is just fucking downright hilarious. And Rob, before I run, if you want any recap of what happened when, hey, I tried to get his take on it, and then he made a video rambling. I got a shout out, which was cool. Although, Bill,
yeah, so did I, by the way.
Yeah, congratulations, Bill Murphy. By the way, when then in the email he talked about how he kicked your ass in 2011. Then he made a video talking about how he kicked your ass in 2011. But what he didn't mention in his video is that I said, Jeff, would you be willing to bet silver that I could disprove that you kicked Bill Murphy's ass and that you actually humiliated yourself? And there was no response. He didn't mention that in his video. The other question I asked in midst of, now he was even waxing poetic about these guys that they're having wet dreams to Jerome Smith. Hey, I was 2 years old in 1980. All I said was that in Jerome Smith's book, he quotes Paul Sarnoff as saying Jay Aaron was one of the big silver shorts. I was most exposed when the price was rising. I just asked him if that was true and if he'd be willing to testify to that as much in a court of law. He didn't answer that. He talked about a lot of other stuff, but so I don't care what these people think. I don't care what a U.S. judge thinks. I mean, my responsibility and what I've promised with when I get on this show or any of these shows is that I'm going to explain the silver market as best as I can. I think there's a series of crimes that have been happening for a long time, culminated by what happened on February 2nd, maybe only outdone by the way these guys are lying and covering it up since then. But we're going to be releasing something that, so for anyone that isn't really aware of the full history, because most people don't tell you about it. The people you guys do, and that's why I'm honored to be friends with you and see you as role models and stand up against. It's the same thing from since first grade. There's one guy who's a bully. There's one guy who's a good guy, and eventually the good people stand up to the bully, and that's what I think is happening, and it's going to be darn fun to watch.
Hey, Chris, I think before you go, John had a question for you.
Sir.
Hey, Chris, how you going?
I am quite well. John, yourself?
Very good.
Sorry I missed you yesterday. I saw you called. I was preparing something. I think you'll be, when you see it, My belief is that you'll be like, all right, you know what? I'm glad I didn't take the call so that this could be brought to the world. It'll be a nice addendum to your new lawsuit. Maybe we can check in. But anyway, I'm sorry. What was your question?
Sure. Well, look, my question is, I mean, every day I'm listening to you take shots at Goldman, at JP Morgan, at CPM Group, and Jeffrey Christian. I'm just wondering, how come you haven't got a letter yet, and I was the one who got the cease and desist notice?
Well, I have the secret decoder ring or defense shield. I don't know what's that?
No, well, I was going to say that ring, is that available for purchase in Australia? Maybe I should buy one as well.
John, I'd be happy to give you one compliments of Arcadia Economics. See, here's the good news. I don't know. I have not researched into Kitco as much, so I don't know. And that's why I haven't commented there. I've heard a lot of the things. I've heard from people who have metals, and I would not put an unallocated order there. I wouldn't put an unallocated order anywhere. But see, at least it's funny you ask, because I thought about this, and there was even many times where I was like, can I say this or can I say that? And well, I have two little advantages that I don't know, I guess everybody has, but maybe just doesn't realize it. A, if it took me going into court through the discovery process with the CFTC or Goldman Sachs or JP Morgan or Perth Mint, then so be it. And I've told them as much. I called and said, like, you want your lawyers? Do you want my contact information? Like, what is it that they're going to say? I mean, I guess conceivably I don't know, maybe they could find some judge who thinks that I'm the bad guy in the situation. I mean, that'd probably be fun to cover. I'll bet that it's kind of fun thinking about, and if you actually got some judge to side with Goldman Sachs and JP Morgan against what I've said, then I'll bet whatever the penalty is, I could make more making movies and having a field day publicizing it. So, I mean, if they want to go through, even years before I said this, I kept hearing people who were much more legally savvy than me. They're like, they'll never go through the discovery process. I don't think they will. And if they want to, that would be the most fast. It'd be worth it. So I don't know what is the counter argument. I mean, and if anyone wants to discuss the evidence, I mean, that's all I've been asking. I'm calling. I ask the questions. I just report things honestly. What is the crime that I've committed? I called and said, hey, I publicly accuse you guys of fraud. Will you defend yourself? Is there anything I'm missing? Nobody will talk. I say, here, you said this, you said that, and then here's where it doesn't match up. And the other thing is maybe, it's like, I don't know what they would argue. And if they want to go to discovery, so be it. B, I don't know. I just think it's the right thing to do and say as people are getting cheated and stolen from. And, you know, I think there's something to, do we look for the good thing? What could go well or what could go wrong? I don't know. Maybe something could happen. And John, I don't know. My guess is that whatever Kitco does with this suit, I will help. I'll help you turn it into something positive. And it's because I did think about this a lot, and it got to the point where it's like, shit, this stuff is happening. Well, what kind of coward would I be if I said, well, I'm afraid something conceivably could happen when I actually might have the ability to do something to stop it? And it's like, I'd rather take my chances than living my life just watching it happen, and whatever the consequences that is how I sleep at night.
Thank you, Chris, so much for joining. We'll let you get back to, I believe you said your mom's in town, right?
Yeah, she's been watching. She read what I've been doing so far. I think Mom was impressed. She's a big silver fan too. And of course, Nibbles has been barking it up over there. I've been trying to get my partner Yar to buy us silver oil morning. Andy, I'll tell you what, how many of those Mayan Aztecs did you set aside for me today?
6,000.
Oh, I got the whole 6,000?
Well, I have 100 set aside for you, but there's another 5,900 if anyone else wants them.
Yeah, well, hold on a second. Let me show you how amazingly cool these are. Andy, are you going to be able to get the 10-ounce and 5-ounce size too? This is a 1-ouncer. Look at that code. Andy, we can go down to Mexico, find some shamans to help us translate the knowledge. I don't even know if Goldman Sachs has that kind of ancient wisdom.
When I tell you I would really enjoy that, I hope you believe my sincerity, because I can only imagine what that would turn into. Yes,
especially if you knew what Silverfest 2 is going to be all about. I'll just say you may want to leave the Halloween season open for that.
I know you well enough to know that would be a trip I wouldn't want to miss. My head trader said he would call first thing Monday morning on the 2, the 5, and the 10.
All right, and I'll tell you what, because of the great holiday and the fact that I already have 100 of them, let's tack on another 100 right on the air live. Put me down for 200 of those Mayan Aztec calendars, and I will personally guarantee you I will help you sell the rest. Think if people give away a couple of free ones, let people talk about them. That will sell the rest. Is my suspicion.
They did sell me 6,000. They're being produced. They told me I'd have them in 2 to 3 weeks. Just fairness and transparency.
Can you mark me down for a 5-ouncer for my man Silver Bill Murphy on the Arcadia account?
If we get the 5-ouncer, yes. If not, we'll do 5 of the 1-ouncer.
No, we need the 5-ouncer. Come on, tell Shauna, she'll get it done. Tell her she'll get it done, and I will see you guys later. Thanks, Chris. I love you all.
Bye, hey, Chris, I'm going to be down there this week, so I'll touch base with you later.
I can't wait.
See you, buddy.
Thanks. The amazing Chris Marcus, Arcadia Economics. Hey, Andy, we had a question for you in the chat, if you don't mind.
Sure.
CI asks, or he says, he moved completely into precious metals in the May 19 repo crisis. Follows all of us in terms of our work. He says, most metal in segregated storage with Miles Franklin. How safe is segregated storage versus in your possession?
Well, segregated storage with a company that is above board. For example, our Brinks program has audits quarterly, independent audits. Brinks does internal weekly audits on anything that comes inbound or out. If anything moves in and out of an account, it is audited independently by the Brinks staff. And you can go and get it. And these are really, really important trademarks that you want to be able to get your stuff. And I'd like to make an important distinction as well about IRAs. A lot of people who buy precious metals IRAs think that they have segregated metal. Most of the depositories pool their silver in IRAs. One of the reasons I use the Dakota Depository almost exclusively with our IRA programs, because they physically segregate your IRA metal. Bottom line is simply this: if you're going to have it stored in a depository, you have to pay for it, and you have to get it segregated. If you don't, you're setting yourself up for big problems. Bullion Direct in Austin, Texas, I believe, $35 million in their pooled account disappeared, and they were shut down, and their owner, I think, is still in prison. It doesn't matter how reliable and trustworthy a company is or a name is. You want to store with third party and store allocated and segregated and audited, and you need to be able to go and get it if you need it. Those are, to me, the only things that I would ever settle for in any storage account, and make sure that it's insured fully for replacement value, not for bullion value, for replacement value.
John, what are your thoughts on that? I know you've done a lot of work. Oh, by the way, I wanted to ask you a question. Didn't you approach your local police agency about some of the things that are going on, and what was their response?
Well, so on this issue of allocated segregated accounts, there has been a situation with we have a new guest.
Yeah, Rafi Farber is joining us from Israel. Rafi, how are you doing today?
Hi, Rob. How are you doing? I'm good.
Very well. So Rafi and I are
Rafi.
friends from Seeking Alpha. Rafi has a subscription service over there at Seeking Alpha called the Endgame Investor, if anybody's interested. So we have John Adams on the phone, Rafi. We have Bill Murphy from Guide on the Metropole, Andy Scheckman. So thank you for joining the program, Rafi.
Welcome. Glad to be here.
So I'm sorry, John, I didn't mean to interrupt you. You were talking about unallocated.
Excuse me. Yeah, no, sorry. I was talking about allocated, segregated. There was a woman here in Australia who stood for delivery in March. Couldn't get her property back from ABC Bullion, and that is that is an unfolding saga that's going to continue to play out. One of the points I'll make in terms of what Andy was saying. Andy has been talking about the importance of allocated, segregated, and while that is the safest way to vault your metal, there are definitely problems in that product option. I would say that I strongly suspect there are some players in the international market who are running a fractional reserve allocated, segregated program, and their customers don't know about that. So I do think that if these shortages continue, not only will we see exposure of unallocated, full allocated products, we're going to see some interesting stories come out about allocated, segregated accounts, and that is obviously going to cause a lot of panic and shock, particularly among retail investors. So I know that Andy talks a lot about the Brinks program, and that's trustworthy. And obviously, I have no information to doubt what Andy's saying, but people need to be very careful about when you are going allocated, segregated. There's a whole bunch of questions you should be asking your vaulting provider, and there's a whole bunch of red flags that you can pick up if there is something amiss. And maybe in the next little while, I'll put together a bit of a checklist as to the sort of questions you should be asking if you have allocated, segregated, because I do think there is some shenanigans happening with that. And then the other thing is, look, Andy, moving forward, no doubt you've got a bit of I'm sure you can put together some sort of checklist of questions you can ask, relevant counterparties in allocated, segregated accounts, and hopefully investors can sort of, ensure that they do their due diligence to make sure that if a provider says that they have a client's metal in allocated, segregated, that they actually have it.
John, let me ask you a quick question. This is Andy. In the case of ABC, is it stored in-house or is it a third-party provider like Brinks?
Well, no. Well, the claim is that it is stored in-house.
That's the problem. That's the problem. That was Bullion Direct. I think if you ever allow the company who you buy it from to store it for you, that's problem number one. That's why we use third-party on all of our storage accounts. And you just want to have that Chinese firewall in there. You just want to have a separation between who you bought it from and who is purportedly storing it for you. That, to me, right off the bat, would be point number one, is that you have it stored at a third-party depository and one that is fully licensed and insured. And there can't be any impropriety where they have the urge to dip into what is being stored in order to facilitate orders, thinking they'll be able to pay it right back. That's how it all starts. That's how it all goes bad.
Real quick, I wanted to thank the viewers for joining. We haven't done that yet. We have about 900 concurrent viewers so far on the stream. Thank you all for joining and tuning into this very special commemoration or remembrance of the slam in the silver market from 10 years ago, when the bankers basically put a bunch of paper on the market and dropped the price down from its all-time high. Thank you to Stray Dog for making the contribution through the super chat. We appreciate it. He says, you guys are making history. Thank you. I'm stacking it now. You are welcome. And so I wanted to turn to Rafi to talk about the Comex, because I know, Rafi, you cover that quite a bit in the Endgame Investor that you have there at Seeking Alpha, as well as a lot of other things. But it looks like on our first delivery day here, if I can show the chart, on the Comex for the May contract. We have 5,123 deliveries of silver, which by my count is about 25.6 million ounces. What are your thoughts on deliveries for this month? Do you think we're going to see a big delivery month, or because the open interest is rolling to the next contract, do you think that may be all for silver for May?
The rollover is finished. I think the deadline is already passed.
Right.
So, but the all-time record was something like 17,200 deliveries, something like that. But what I think is more important than the actual delivery numbers that we see is the direction that silver flows are going, either into or out of the Comex. I mean, last year they were going in. There was a flood of gold in at around March, April, and then silver followed around July, August, September. But since SilverSqueeze 1, since February 1st, when SilverSqueeze first became a thing, the flows have been going out. So I think the peak was something like 400 million ounces, and what are we down to like now? 330, something like that. I didn't check the latest numbers, but I think it's around 330 million. So I think 70 million ounces have been taken out of the Comex since February. So that's very encouraging. I mean, it's not like they're running low yet. They're not even close. But to get 70 million ounces off of, you know, the biggest cartel in the world is an accomplishment. And it doesn't mean that we have to go attack Comex itself or you know, try to get deliveries ourselves. I mean, silver is a homogeneous market, so wherever you're getting it delivered from, it's going to have to be refilled from something, you know, some source. So wherever you buy it from, it's all the same material. And just keep buying the physical, and eventually it'll start draining more and more from the Comex, and that's what we want to see. So yeah, hopefully we see a lot of deliveries, and it depends on how many spot contracts are going to be bought and delivered, and that always happens. We don't know that until the end of the month. So we could see some 10,000, 11,000 maybe. It depends on how many spot contracts are bought. But the other thing that's really interesting that I'm seeing is that paper silver funds, SLV, PSLV, unallocated, pool allocated, all these are all paper claims on silver, and the total. I mean, Rob, you can see this on Gold Charts or Us. If you do go to the total transparent silver holdings, they've been falling since the paper price of silver bottomed around late March. For a month now, they've been falling despite the fact that silver has been climbing. And I've never seen that on a consistent basis. Maybe I'm missing something, but that would mean that the attraction of paper silver as a silver vehicle is falling, because usually as the price of silver rises, there's more deposits into these funds to keep them in line with the futures price. But since the holdings are falling now, that means that the demand is not there for paper silver funds, and they have to lower the amount of shares of SLV and PSLV and all this other stuff in order to keep it in line, because the demand isn't there. So where's the demand? The demand appears to be in the physical markets. That's where I'm seeing it.
All right. Good comments there. And I know that you also write for Calvin Iyer, which is in the gambling market.
I did.
So you talked
Calvin Iyer stopped. Calvin Iyer stopped publishing gambling news, and they went all into Bitcoin SV. That's their thing. So I'm not a Bitcoin expert, so I can't really write on that. Yeah.
Well, because you wrote so much about the gambling market, I wanted to ask you a question.
Mm-hmm.
Does the PM space resemble the gambling market in any way? And do you think that when people get into physical that they're gambling, or do you think it's a safe bet for the long term?
Sorry, my lights just turned off on a timer. I'll get them on after I answer this question.
Okay.
Is the precious metals market like the gambling market?
Yeah. Well, very simply, are you gambling by putting your money into the physical, do you think?
Oh, okay. Like actual gambling, not like investing in gambling.
Right.
Are you gambling your money? It's not exactly that. I would say you're playing a game of chicken, really. I mean, there is no problem in using SLV as a vehicle to leverage the silver price to earn more dollars. If that's what you want to do it. PSLV, same thing. I mean, PSLV is probably more trustworthy than SLV. I trust Eric Sprott personally more than I trust Goldman Sachs or whoever runs SLV and all the authorized participants and JP Morgan, all that. Not saying anything bad about PSLV, but the thing that we are trying to prepare for, and the thing that we know is coming, is the end of paper currencies, because there's no way they can continue being abused like this. So when that day comes, and SLV and PSLV and all these other paper silver funds go to infinity or wherever they go, hundreds, $500,000. So you're going to cash out, you're going to get your dollars, and then what are you going to do with that? Like, what's the point? It would only work if you were able to get out of the paper game and convert to physical just in time or before the end game hits. I mean, otherwise you've got a lot of dollars, and what are that going to do for you? So that's the game you're playing. I mean, if you want real money, buy physical silver. If you want to play with dollars using the silver price as a leverage thing, then do that. But just be aware that's what you're doing. It's okay either way. Just know that it's not going to help you when the bleep hits the fan.
Right. Good comments. Any follow up from either Andy or Bill on that?
I just respect what all you guys are doing. If I might say, I'm so old now. I've been doing this for 22 years. I can't tell you how much I appreciate what you all are doing to bring things to the limelight and make things happen. People have forgot about it, but Ghana and myself have been to Washington like 4 or 5 times. I went around and gave this document, Gold Derivative Banking Crisis, to all the different congressmen and senators. We met with Speaker of the House, Dennis Hastert. We met with the Monetary Committee. We had a conference in Washington. Then we had a C-SPAN conference in addition to our regular conference, and pounded the table like you guys are pounding the table today, which again, it's a new tack and hopefully one that's going to work better, because all we ran into was silence. And they don't want to deal with it. They don't want to mention it. They don't want to talk about it. They just want to do it behind the scenes. And as some of the guests have been saying, it's probably one of the biggest frauds in history in the sense of what they're doing. And if I may, I still don't understand, because I keep expecting silver to go towards 100, how they continue to get away with it after all this time. Yes, the paper market's instrumental, but they've got to be coming up with physical silver from somewhere, the SLV or somewhere that people aren't aware of, that keeps hitting the market. Or they said earlier, you'd have an arbitrage. So anyway, we're going to continue to pound the table, God and myself, what I write about. And hopefully, because I want all the people that have been behind what you all are doing and behind what I've been talking about for years, that they're going to make a lot of money when they finally lose control and silver explodes going towards 100.
Yeah. Good comments. Go ahead, Andy.
I just wanted to just say, echoing what Rafi said, to me, one of the biggest developments of the last year and a half has been the amount of deliveries off of Comex. Last year, Chris Marcus and I would talk quite a bit about why they weren't leaving the building, and the fact that they're now leaving the building is a big development. 70 million ounces taken out of Comex is a really big deal, and I think that's indication that the big money is concerned that rehypothecation is real, and getting their metal when they need it. They've bought it, and now they're questioning the ability to get it. So they're front running potential problems in the Comex. So I think that's really, really important, really, really important. And that's kind of following what the big money is doing before it happens.
Yeah, and the sort of maybe the ultimate big money, weren't there a lot of repatriations of gold sitting in the Bank of England from, wasn't it Brazil and Hungary?
Yeah, it was the Bank of Hungary, Turkey, Austria, Poland, the Dutch National Bank, Bank of Austria, starting with the Bundesbank in Germany. Yeah, and so that started everything. And so when you see the biggest money in the world bringing their metal home, removing the counterparty risk of the Fed and the Bank of England, then reclassifying it, and then seeing the others on Comex, this new reportable group, start taking massive deliveries and now pulling it off of the exchange itself. This is a linear progression of, I think, front running potential problems by the wealthiest, most influential traders on the planet. I am going to need to cut out in about 5 minutes. I'm at 5% battery, and this outlet isn't working in our new house, and we're having some electrical problems. The electrician's coming out in the morning, so I'm going to stay till my computer dies. But if I just disappear, that's why, Rob. No disrespect meant.
No, not at all. Thanks, Andy, for joining. I knew you're the first one on. I appreciate you joining the stream. Appreciate all the support from you.
Absolutely.
In all honesty, you put out in the market. I see you a lot like Keith Newmeyer. He's in the no mining space. You're in the precious metals retail space. You guys kind of tell it like it is, and you're not afraid to do that. So thank you for doing that.
I appreciate it very much, and I'm a big fan. I watch everything that you put out. I love your analytical style, and I like the fact that you're measured and you think about what you're saying. A lot of us, myself included, sometimes need to be a little more detail oriented instead of being, macro, big picture perspective. Although I think the gist hits home, you connect the dots in a lot of ways for me. So I do appreciate it. And when I called you that one night talking about just the difference between a tier 1 asset and a tier 1 reserve, you were very kind and did an amazing job in clarifying that for all of us out here. So anyways, for what it's worth, thank you.
Yeah, no problem. So Rafi, just wanted to turn to you. I'm going to leave this kind of open. What do you want to talk about in terms of the precious metal space? What are you seeing? What is the trend?
What am I seeing?
Yeah.
Well, I'm seeing a lot of understanding, of questioning, these issues that we're talking about, and these things that people are suddenly becoming interested in. I don't think anything like this has ever happened before, where just guys off the street like you and me, join up with big CEOs like Andy, and we're talking the same story here, and we're actually connecting with people on a retail level, on all kinds of different levels, and we're making this story public. I mean, we just saw with John. I mean, John Adams is a huge part of this, and shedding light on all these potential scandals. I don't know if anything is a scandal. I'm not accusing anyone of anything, but there are things that are just strange here, and bringing attention to them for the first time on a, not saying that these stories haven't been published before, but now that we're getting the retail crowd interested in the potential problems with the precious metals industry, I don't think has ever been done before on a big scale. So, I mean, it's exciting to be part of this. It's exciting to bring these issues out into the open, because this is really what we're trying to bring out into consciousness, that there is something wrong with money. Mm-hmm. and everybody's known that. People know that. People have known that since the 1970s, even from before. But when you get down to it, all of paper money is really a gold and silver substitute, because otherwise, paper money wouldn't make any sense and wouldn't have any economic meaning to it. I talked to, this is a little bit more theoretical, but if you try to get down to what money is, it has to make some economic sense. It has to give economic actors some kind of a signal. And in order to give economic actors like you and me and anyone in the world some kind of a signal as to what things are worth so we can trade, it has to be indexed to something in the past. Because you wake up in the morning, you know how much things cost, more or less. You know how much money you have to make, how hard you have to work, how much you have to buy. And you basically have this picture in your head. How do you know that picture? Because of yesterday's prices. So it always goes back into the past. So the only reason why the dollar has any value is because it was indexed to gold, and gold was indexed to silver, and they had a ratio. That ratio goes up and down with the market, but basically all of paper money is still a gold and silver substitute. So now we're getting down to what money really is, and it's still just a fractional reserve operation based off of a physical supply of gold and silver that exists in the world. And we are not trying to crash the dollar or anything. We are trying to reveal the true exchange rate between real money and its substitute. That's all we're trying to do. We're just looking for honesty.
Yeah, and to that point, I know you and I talked before about the shekel and your father's experience with that. We just have a few minutes left, but could you briefly kind of summarize that up, and how did that affect his understanding of money, and did it affect yours, his experience?
Oh, well, I mean, my father's not from Israel. He spent some time here in college. Mm-hmm. But yeah, there was a hyperinflation here in 1984 from around the Yom Kippur War in 1973, when the Egyptians invaded, until around 1984. Price inflation here was 15 to 20% a year until 1984, and it got to like 600%, and then they just got rid of the shekel and started the new shekel. And what caused that was basically in the to fund all the to fund the war, the Yom Kippur War and the War of Attrition. That, you know, it didn't end with the Yom Kippur War. There was constant fighting afterwards for years. And then, you know, the invasion of Lebanon in 1983 really got government spending off, you know, out the wazoo. So the Bank of Israel was directly financing the deficit, and then, you know, that caused the currency to crash. So so they replaced it. They replaced the old shekel 1,000 to 1 with the new shekel, and then they promised that the Bank of Israel wasn't going to fund the deficit anymore. And then all of a sudden things stabilized. But how is that possible? Because there was still a functioning gold substitute in the dollar to stabilize things, and, you know, it caused a lot of unemployment. And when any country goes off of an inflationary drug, it causes huge unemployment and a lot of dislocation. But then you get confidence back and you slowly rebuild. So that's what happened here. So I think the story you're referring to is when I was a kid and I was snooping around my father's desk, and I looked in and I saw 1,000 shekel bill. I was like, wow, Abba, you have 1,000 shekels, and I was like, wow, we're rich, you know. So I was like, what can you buy with this? He's like, oh, basically nothing. It crashed in 1984 when you were born. So then I kind of I think maybe that was my first suspicious thought of what paper money is, and like, okay, this seems kind of dangerous. And then I would ask him why there's always inflation and why prices always go up. He said that's how the economy grows. And then I was picturing like you know, $1,000 bills everywhere and then $1 million bills everywhere, and then we run out of room for all the zeros. So what are we going to do? This doesn't make sense. So that was when I was like 7, 8, 9, and then I just kind of put it away in my head until I got to the macroeconomics class in high school, and I said, this is the same garbage. I don't understand what anybody's talking about.
That's right. Great story. I love it when you recount that story, because it's so real and it's visceral, and it's not something in a textbook from a long time ago. It's something that you kind of discovered, you know, through your culture, and money in a large part, I think, is symbolistic of each individual culture. And we had on our conference back in January, our Solutions 2021, we had Fernando Aguirre, who was in Argentina in 2000 when that currency hyperinflated, and he was relating his experience with the peso and all of the problems. And it was much like yours. It was just inflated away. The paper money wasn't worth much. People were trying to barter things, and they were using gold and silver to some extent, but they were just like trading whatever they had. Like if they had a goat, they would trade a goat, you know, for milk and eggs or whatever the case may be. And we've seen that so many times in history. Those fiat currencies just explode, and they all explode 100% of the time. There's never been one, you know, to survive it. And eventually that will be what happens to the US dollar. Like you said, Rafi, we're not trying to get that to happen. We're just trying to get price discovery. But if they keep going the way they're going, they're going to destroy the dollar, just like, you know, the shekel had issues, the Argentinian peso had issues. What is it? The Deutschmark in Germany, and the Zimbabwean currency. I mean, it happens all the time. It's really not a unique event in human history.
Rafi, before my computer cuts out, I'm at 1%. So when they revalued it, were they saying that 1 shekel was now worth what 1,000 used to be?
Yeah, they did it 1,000 to 1.
Interesting.
Yeah. So everybody's savings went to basically zero, and mortgages were reset and everything, and it was a big mess.
I would say so. All right, I'm going to head out. All you guys stay well. Bill, you know how much I love you and respect you and appreciate everything you've ever done for anyone who owns an ounce of gold. So always good to see your face. You all take care. Stay well.
Appreciate you, Andy. Enjoy your new house. Go jump in that pool.
I will. See you later.
All right, Bill, Rafi, we're about to wrap up. We got a couple minutes left. Any last thoughts before we kind of wind it down on this May Day special, 10 years after the Silver Massacre?
I just can't stress enough, you know, how great it is to see what Rafi and you and all the other guys and Andy are doing as an upgrade to what we tried to get started 20 years ago. And maybe this is something that's going to work because it's so different and times have changed, and the little guy can start to make a difference. And I did my share with buying 100 ounces and more than that, a decent amount more. And I just hope that this begins to work, because quite frankly, I am so sick and tired of the same drill over and over and over. Here we are talking today, the 2 billion banks mentioned, JP Morgan and Goldman Sachs. That's exactly how Goddard got started 20 years ago, 22 years ago, talking about, excuse me, Goldman Sachs and JP Morgan. It's the
Right.
same people. Anyway, thanks again for all the show.
Yeah, Bill, thank you so much for your influence over the years. I was reading Goddard back in 2010, 2011, when I first got started writing. You guys were a huge influence on me. So I want you to know that what you've done over the years has affected so many people, and it's that network effect. It's you guys starting that and then it reaching out to more and more people over time. And I think a lot of what we do now is a result of what you did back then. So you definitely played a huge role in that. Thank you so much.
Thank you.
Appreciate
Yeah,
it, Bill.
my story with GATA is I started out interested in gold and silver with the more mainstream guys, and who kind of discounted GATA and called Bill Murphy the crazy guy, and never took anything he said seriously. And there is no silver manipulation. I was kind of with them, and then I only slowly started to turn. Only a year or two ago, where I started taking this seriously and looking actually what is going on in the Comex, and I realized that you were right. I mean, it's leadership always starts on the fringe, and you were the fringe. Precious metals investors, the mainstream, or even they're on the fringe, but GATA was on the fringe of the fringe. So, that's real leadership, and it's a lonely place to be. It's so lonely, but it's getting less lonely because people like you. And I guess I'll close with one thing I said to my daughter, and when I'm explaining to her that all paper money crashes, and it just keeps happening over and over again. She said to her, why do they keep doing this over and over? And I said, well, do they not think it's going to happen? Do they not understand that this is what happens when you do this, when you print trillions of dollars or trillions of whatever currency units you have? And I said, look, it's not that they don't think it's going to happen. It's not that they don't acknowledge that it can happen. It's that they think that they're better, that we're better now, that we understand we can stop it, and that it's not going to happen to us. It's the same idea of American exceptionalism. America is another country. It's a great country. It used to be a great country. I moved out, but I'm worried about the future there. I'm worried about the future here. I'm worried about the future everywhere. But yeah, it's basically human hubris, that they think that we're better now, and it's not. And we can control the laws of economics. We can break the laws of gravity, and it's not going to happen to us because we're better. But it is going to happen to you, and you're not better. That's the reality, and we have to prepare for that.
Yeah,
there's nothing else to do.
You're right. It happens to the best of us. Rafi, thank you so much for joining. Right now, before we end, I want to give a shout out to all the viewers. I think we peaked at well over 900. I think this video is going to, reach tens and tens of thousands of people. Thank you, everyone who's watching this program, because it validates what we do. It makes us feel good about what we do, that we're reaching people with this message. And everybody involved in Wall Street Silver, the silver movement, the gold movement, we want to thank you so much for you guys jumping on and getting involved in the precious metals. It helps. It's really helping us spread the message. So please network as much as you can. Get on social media. Show this video to your families. Go to the Endgame Investor. Go to gata.org and La Metropole Cafe and other people's website and spread the word. We appreciate you so much. Quick shout out to Stray Dog for his contributions, and thanking Andy for being a hero. Leonard Harvey as well. All the people that did the super chats and asked questions of our guests. We appreciate it. Till next time, everybody, that's Rob from Gold Silver Pros and all the wonderful guests we had today.
Thanks, Rob.
See you guys next time.
See ya.
Have a good week.